Several Tesla investors are keeping their ears to the ground for performance forecasts for the car company in 2023, and here's one that may interest many. Famous Tesla bull and Elon Musk's favorite retail analyst, James Stephenson, has said that he expects Tesla's Q4 revenue to be at an all-time high, going beyond $25 billion, which is already more than the company's earnings in 2019. He cited that while the bears may expect Tesla's recent price cuts to wreck its prospects for 2023 earnings growth, he does predict quarterly record deliveries and earnings for Tesla in 2023. Hey guys, welcome back to Tesla Tomorrow. In its recent tweet, the Tesla analyst posted a chart showing Tesla's average revenue, including his forecast for 2022 Q4. According to him, he expects Tesla's energy to see substantial revenue growth from its Megapack as the new factory in Lathrop ramps up and 2023 incentives kick in. Tesla is currently ramping up its Mega Factory, the company's Megapack factory. The company's Megapack batteries are all a crucial component for its plans for sustainable energy in the future, and Tesla has been successful with ramping up that production. The automaker noted that in its 2022 Q3 update letter, it will have energy shortage deployments, which have been on the rise, increasing by 62% year-over-year in Q3 to 2.1 gigawatt hours. In the update letter, Tesla noted that this growth was particularly impressive considering the chip shortage. Tesla stated that the demands for its chip production and shortage on products remain in excess of its ability to supply, and the company is in the process of ramping up production at its dedicated 40 gigawatt-hour Megapack factory in Lathrop, California to address growing demand. What does this mean for Tesla? More to come, but if you like this type of content, don't forget to hit that like button and subscribe to keep up to date with everything going on with Tesla. James Stephenson said in his tweet that Tesla makes the two best-selling luxury vehicles in the world, which are the Model 3 and Model Y. He stated that Model 3 sales are still growing, but not as much as the Model Y, which is ramping up production past 3,000 vehicles per week at Tesla's newest factory in Austin and Berlin. Tesla cars are doing well in markets globally. The car company isn't just the highest-selling EV maker in the US anymore, as it became the country's best-selling luxury car brand in 2022. According to the Automotive News Research and Data Center, Tesla sold 491,000 vehicles in 2022, a 44% rise from the previous year. What makes this more interesting is that Tesla topped sales in the luxury market, in a year when sales of premium automobiles were down in the United States. There's no doubt Tesla cars are gradually dominating major EV markets, and this is expected to boost earnings over the coming years. James Stephenson said in his tweet that Tesla's earnings per delivery are world-class for any automaker, let alone an electric vehicle maker. He wrote that Tesla's strategic price reductions will throw the brakes on earnings per delivery growth in 2023, but earnings are expected to rise because of deliveries. The Tesla analyst also added that his forecast for future years' earnings growth are actually largely driven by more buyers opting to pay for FSD at higher prices as features improve. Tesla's doing well in terms of this FSD software, and it's still got a lot to do when it comes to making that technology ready for use. At the recent Tesla AI Day, the company disclosed some key statistics about the software, which is currently still in beta testing. While Tesla has yet to provide a timeline for when that software is going to be ready, it is expected to hit the market soon. According to the automaker, the number of FSD beta testers has gone up from 2,000 in 2021 to 160,000 in 2022, despite a few hiccups along the way, mostly regarding its safety. In recent news, Musk disclosed that the FSD system will be out for customers in due time, and the software is now going to cost $15,000. He also revealed plans for a global rollout pending regulatory approval. The FSD is another goldmine for Tesla and provides enormous potential for the automaker to increase its earnings. Speaking of profitability, James Stephenson noted that earnings growth matters most to investors. And this is in fact true. Investors are motivated to bet on a company that shows good signs of profitability and has a convincing earnings record. This is probably where Tesla has a significant market advantage. During an invite-only Goldman Sachs tech conference in San Francisco, Tesla investor relations boss Martin Viecha disclosed that the car company has already begun manufacturing improvements, which is crucial to scaling EV production to mass markets. According to Viecha, this optimization is the assembly process which has allowed Tesla to slash the production cost per vehicle from $84,000 in 2017 down to just $36,000 in recent quarters. And almost none of these cost savings come from the cheaper battery costs. the EV maker has leveraged new production techniques and a new factory design to optimize production and reduce the time needed to build cars. Tesla has also begun to modify its EVs by removing some of the parts that they can do without. The automaker had previously announced that it had plans to remove all USS ultrasonic sensors from its new cars and go into the Tesla Vision tech instead. If the company pulls through, then it can save costs as sensors take up a significant part of their production budget. Also, Tesla's ramping up its 4680 battery cell production. According to a recent update by the car company, it's making progress by ramping up production of the car's battery cell, and is also planning to reduce dependence on this new cell. This is actually Tesla making attempts to use giant caster machines to make car bodies with just a few massive casted parts. In 2021, the car company noted that it was working with about half a dozen automakers taking the same approach. Considering all these fundamentals, is it likely that Tesla will make at least $10,000 per car? Well, it is, and this may go even higher. Likewise, Tesla shows great profitability with its humanoid robot Optimus. Following the release of the Optimus prototype in 2022, not all investors were impressed with it. However, while Musk does agree that there's a lot of work to be done, he believes that the potential is not recognized by a lot of people. According to him, Tesla plans to produce millions of these robots and sell them for less than $20,000 each. He further stated that he sees the Tesla bot as an incredible innovation in 5 or 10 years from now. If Tesla can scale up production of the Optimus, then it's also able to increase the rollout of its FSD software, and all that could make a significant income boost to fund share buybacks in a few years. However, although many Tesla investors are bullish on a share buyback, there are still concerns about whether now or not is the right time to do it. Some investors believe that if Tesla were to do a share buyback, then it should have enough cash reserve enough to cushion the effect of any unexpected situation that may pop up in the future. But without sufficient cash reserves, then the company may have to borrow some money or sell some shares, and all that has a negative effect on its valuation. In fact, some Tesla investors suggest rather than financing a share buyback, they should focus more on factories ramping up production and its 4680 cell. Stephenson's forecast assumes that Tesla will grow earnings over the next couple of years by making FSD so compelling that more buyers will pay a higher price for it. Aside from FSD and Optimus technologies, Tesla could also earn significant profits from the robotaxi and semi-trucks. While the automaker has begun production on its semi-trucks, the robotaxi project still remains in the works. In a recent tweet by Tesla's third largest investor, Leo Kogoan, he cited a profit model for Tesla's robotaxi. According to him, Tesla could produce its own small robotaxi with 200% profit per year by selling the vehicle at $100,000 per FSD to private owners and collecting up to 20 to 40% fees. If they can achieve this, then Kogoan believes that shareholders will benefit greatly. Kogoan claims that he's extra bullish on Tesla's future, adding that the automaker's market cap will be more than that of Apple and Saudi Aramco combined. Musk also made a similar comment after Tesla released its earnings for the third quarter of the 2022 period. At a recent earnings call, Musk said he believes Tesla can exceed Apple's current market cap. And while he did note that he doesn't expect that to be easy or happen anytime soon, he does predict that Tesla will be worth more than the tech company, roughly twice the value of Saudi Aramco in the future. While investors can stay hopeful on Tesla's future earnings, it is important to look at the company's performance and evaluate the cost of investing in the car company. What are your takes on James Stephenson's forecast for Tesla? Let us know down below. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.